Good afternoon, sir.
Good afternoon, sir. How are you, sir?
I'm good, sir. How are you?
Fine, fine, fine.
You may start the session.
Shall we wait for 5 minutes?
Okay, sir. Whenever you are ready.
Shall I start now, sir?
Yes, yes.
Okay. So today and tomorrow, we will discuss some more aspects in the credit management process of banks, which is useful to the insolvency professionals in discharging their duties. Why? Because most of the IPs, they are handling the cases, either CIRP or liquidation, related to the non-performing assets of the bank. So today I will discuss sometime on insurance policies. After that, after sanctioning of the advances, follow-up is also required. In the follow, particularly we are found some red flags. So if at all you know these red flags, definitely it helps a lot in CIRP process while addressing the PUF transactions or identifying the PUF transactions. So today I will discuss about this one. Not only that one, the emergency credit line guarantee scheme also. Now, during COVID-19, almost all corporates or MSMEs, they enjoyed the emergency credit line guarantee scheme. That is the government of India. Now, after pandemic COVID-19, some of the industries are closed due to the big shock of the pandemic COVID. Because at that time, the lockdown or shutdown, or particularly the low performance of the units, and most of the MSMEs, they are not cope up due to that pandemic COVID shock. And thereby they have closed. But at the same time, but they have availed some emergency line of credit. Being a IRP or RP, whether they have availed or what is the present status, whether any claim is received by the bank or not. Up to 2024, I think so, 2024 October, almost all claims are submitted by the banks. The government of India reimburse because they have created trust, they have allocated some funds. So that's why the CGT MSC or emergency credit, these status also you should have some knowledge. I'm not asking you to involve in that, because once the financial creditor is submitted a higher amount, including emergency loan, then you can ask while admitting the claim, what is the latest status of emergency line of credit guarantee? If at all that is government is paid and received by the bank, that is to be credited to the loan account. Thereby, this is and at that time government is giving guarantee. If any default is there, we will pay the amount. We will pay the amount. That's why this is also to be cross-checked by the insolvency professions. Now coming to insurance policies. Whenever the banks are sanctioning loans, either primary security or collateral security, the assets are to be properly insured. So other than the bank loan property, it is the prime responsibility of the IP during CIRP process. If at all any particular insurance policies are due for renewal, you have to renew. Otherwise, if any loss is there, the loss is to be borne by the IP only. Some decided cases are also there. Why? Because you are the CEO. You have to be more the attention in dealing with the company affairs. So you call the finance officer. How many insurance policies are due for renewal? That even during CIRP also, listing agreement and all these things are to be properly renewed. If at all licenses are there, particularly in pharma companies, that is also to be renewed properly. So here, the insurance policy, particularly the primary or collateral, that is also to be insured by the either borrower or the banker. Whenever the loans are given, normally during the tenure of the loan, bank will ensure to insure the primary and collateral security. Now coming to what are the guidelines that are taken by the banks whenever they are insuring the property. Whenever the loans are sanctioned, the two securities, the primary and collateral securities, are to be properly insured. This is one of the conditions in the loan agreement. In the loan agreement signed by the banker as well as the borrower, including guarantor, it is obligatory on the part of the bank to insure that particular asset. If insurance is happened, then anything calamity was happened, then the loss will be mitigated. Otherwise, the primary security stocks, if it all burn, then the company face the sickness, etc. So that's why either primary or collateral security. The collateral security means the land and building, the plant and machinery. If at all plant and machinery, some automated or electronic type of the machinery is there. Due to short circuit or this one, if that particular the machinery is burnt, then the loss is more to the bank. So that's why the primary collateral securities have to be properly insured. Normally, the bank, whenever they are insuring the assets, 110% of the loan amount or actual value of the asset, whichever is higher. So, being a IP, whenever you are whenever the financial creditors, claim their claims, and after verifying the claims, you please ask that particular bank the whatever the running policy, the policy on primary security and secondary security. Normally, the original policies are with the banker, and the duplicates are available with the company. So once they submitted the claim, because I am given working capital for stocks, this much crores, plant and machine, this much crores, like that, along with a proof of document. So along with the documents, you please insist for the insurance policies. Once the insurance policy taken, if at all any eventualities are happening, then the IP can claim and get the proceeds, and that process can be utilized for the company as a going concern, or in case of liquidation, these funds are useful for appropriation of payments. 110% of the loan amount or actual value of the asset, whichever is higher. Suppose the bank has given 3 crores. The stock in the stores is 6 crores. 3 crores into 10%, 3 crore 30 lakhs, or 6 crores, whichever is higher. So 110% of the loan amount or actual value of the asset, whichever is higher. Some of the companies on their own, they are doing the insurance with a low amount. That is also danger. Why? Because if the policy is taken for 6 crores policy, 6 crores stock is there, but the company has taken 3 crores. So later on, if at all any 3 crores loss is there, the insurance company will not reimburse 3 crores. They will reimburse only 1 crore 50 lakhs. That is called average clause. In insurance business, average clause is there. So for worth of a 6 crores property, the insurance policy taken for 3 crores, if a 3 crores loss is there, 1 crore they will pay. That is called average clause. But even though the policy is for 3 crores and the loss offered, the asset is also 3 crores, they don't, even though the assets are 6 crores, they don't pay. Because that's why the full value of the stocks are to be insured. So that's why the insurance policy is also one of the parameter. So please look into that one. And if at all that particular person, the company, they are first banker, if at all they insured, take that insurance policies. If at all that a company has done the insurance policy, and ask the finance officer to produce the same. Second one is a hypothecation clause to be mentioned in the insurance policy. That is also required. What is a hypothecation clause? Whenever the bank loan is there on the asset, it is the duty of the company or the banker to inform to the insurance company that the stocks are hypothecated to so-and-so bank, so-and-so branch. Why that is to be mentioned in the insurance policy? If it is not mentioned in the insurance policy, then automatically claim will be paid directly to the company. If a loan is there, the insurance company will credit the claim to the loan account, not directly to the particular respective, they are not directly given the amount to the borrower. So that's why whenever they are doing the claim, particularly reimbursement of claim, they will or they ask the bank to furnish the account number particulars so that once the claim is finalized, the claim process will be created to loan account, not directly to the borrower. That's why the hypothecation clause is to be mentioned in the insurance policy. That is mandatory. Next, comprehensive insurance. Today, what is happening? Insurance policy cost also around 2 to 3% on the total value of the asset. Anyhow, the companies are paying interest. Second one is insurance policy also. It may be burden to the company. It may be burden to the company. That's why some companies, they don't take all coverage. They will coverage only limited coverage. Suppose one company is there, they have preserved the stock in stores and they have given a theft policy, theft, and that is a lower rate. Next, if at all bankers are not aware of the policy, particularly what type they have taken, they have not aware, then it is a problem. Because if that godown or stores nearest to the sea coast or flood zone, then that definitely the cyclone or floods, that is also to be covered in the insurance policy. This is also required. This is also required. So that's a comprehensive. Take for example, in car insurance. Today, car insurance policy is around 20,000 or 30,000 like that. 20,000 or 30,000 like that on an average. So some of the people, what they are doing means, why I am taking precautionary measures. Then, as per Government of India, the third party insurance is 100% required, and own damage, it is an option. Some of the borrowers, what they are doing means, they will pay 6,000 rupees and they take the particular the third party instead of a comprehensive. Once the damage was happened to the company and the car, the borrower will get the borrower will not get any amount. So that's why the comprehensive insurance is also required. Once why? Because as long as the loan is there, the borrower has to take the comprehensive insurance. So all these things you keep it in mind. Whenever the company any loss is happened and insurance policy is available and claims are to be the claims are to be submitted to the insurance claim on behalf of the company. All these things, some knowledge is also required. Every insurance policy to be renewed before due date. Most of the insurance policies that is to be renewed every year. Normally, the insurance policy is 1 year. Today, what is happening, particularly new vehicles, they are giving 3 years of policy also. They are giving 3 years of policy also. But once insurance policy is not renewed, then if risk happens, then it is the loan amount, the further problem will arise. To avoid that one, insurance policies are to be renewed. Take for example, you are appointed as an IRP, and you forgotten to renew the insurance. And particularly the stocks are there in the godown, and due to short circuit, stocks are fired, and then policy is not there. So whatever the loss is there, it is you are accountable for that. You are accountable for that as an IRP or RP. So it is not the part of the CIRP cost. It is not part of the CIRP cost. So every insurance policy to be renewed before due date. That's why 1 month before, the bankers they will make the daily list and they will complete that insurance policy 1 month before. But at the same time, the borrower also, he has to they ensure that a particular insurance policy for all the assets, whether it is a primary or collateral. Coverage of values to be mentioned in the insurance policies. In the insurance policy, schedule is to be enclosed. Schedule is to be enclosed. Plant and machinery, this much amount. This is the insurance premium. Stock, this much amount. And here, the location is also very important. The location is also very important. What is the location? If at all the stocks are XYZ location, but in the policy, then it is ABC location. If the property belongs to company only, but once the filed, the insurance company will not give any claim to them. So the address, location, and the type of stock all are to be properly verified. All are to be properly verified. The coverage and the assets are to be mentioned in the insurance policy. Suppose the stocks are there. Stocks, 2 lakhs stocks are there, but only they have taken 50,000, which is not correct. Which is not correct. So the insurance amount to be debited to the loan account. Next one is insurance amount. Whenever insurance is policies are taken by the bank, whatever the premium is, they will debit to the account. But for that, banks will also take undertaking from the customer that the policies will be renewed by the bank. Some of the banks, once they forgotten, they may do some this one. They may no. It is your responsibility. No, once continuously bank is doing, that should be continued. That should be continued. So the insurance amount to be debited to the loan account. Loan account. Insurance waiver approved by the higher authorities in the bank. Sometimes the insurance may be costly. And the insurance costly means the waiver. If at all they want waiver, that is to be approved by the higher authority of the bank. And for that also, the party, the company has to give one declaration, stamped declaration. Otherwise, tomorrow, what will happen? They will ask, bank is not taken, that's why property lost, now that's why we are not getting any insurance claim. The same was happened in Visakhapatnam. Visakhapatnam. In Visakhapatnam, Hud cyclone was happened. And earlier, Union Bank of India, Andhra Bank is mentioned. Andhra Bank branches are there. The borrowers normally, they will request the bank not to insure. We are in Visakhapatnam, so for the last 20 years, no floods, nothing. Why you are taking insurance policy? So immediately bank also lenient approach, and they told that okay, and borrower requested, bank also obliged, but a written record is not there for that. Written record is the declaration or approval letter is not there. So after that, in Hud cyclone, almost even the dealers' showrooms are also washed away, and the cars are also washed away. Then on the next day, the borrowers came to the bank, sir, please give the insurance policy, then we will get the claim like that. No. On that day you told me that you are the not required insurance policy is not required like that. They don't listen. They don't listen. No, sir, I never told like that. So on account of that Hud cyclone, nearly 100 to 150 suits are filed in courts on banks only. On account of a bank mistake only, insurance policy not taken. Earlier they used to take. That's why due to Hud, they have not taken. That's why loss was arised. Like they blamed the banks also. So that's why whenever the banks are waiving that insurance policy, they have to take the appropriate authority permission. And if the borrower is taking insurance, a suitable letter to be obtained from the borrower. Continuously, if the borrower is taking insurance policy, the banks has to take the letter from the borrower. Bank need not take any insurance policy. I myself, based on the asset value, we will take the insurance and we will pay the premium, and we will provide a copy of the same to the bank also. Like that, the insurance letters are there. The insurance policies, otherwise it is a risky one. But as an insolvency professional, whenever you are handling any CIRP, you have to ensure all assets are properly insured or not, including the health insurance. Why? Because at the time of joining the company has given mandate that we will provide health insurance to all the staff members. So whatever the assets are there, all assets are properly insured or not. If not insured, insure. If at all any theft or burglary or anything happen, then they may in problem. So that's why it is better to take or to renew the insurance policies. Now, I have clearly defined about the insurance policies. Any doubts, sir? Any doubts up to this point of time? Any doubts? Okay. If there is no doubt, then we will move forward. Now, follow-up advances. Loans and advances follow. This is a big area. This is a post-sanction. This is a post-sanction review. Follow-up of loans and advances. What is the follow-up of advances? Pre-sanction, sanction, and post-sanction. These are the three stages. These are the three stages. So, the post-sanction follow-up and documentation or other ancillary services are there. Follow-up of loans and advances, all these things are there. What is that one? If you see the first follow, we will frequently visiting to the company's unit, and whether the unit is doing activity or not. And if no activity, banks are right to call up the advance. What is meant by call up the advance? Call up the advance means you have to pay the amount. You have to pay the amount immediately. So, in post-sanction, we will take insurance policies. We will take that particular stock statement on regular basis. We will take a quarterly information report from the company. All these things are there. This is called post follow-up formalities. But in post follow-up, banks, we are find some red alerts. Even in the company also, red alerts are there. These red alerts means they are not following the guidelines. They are doing the business in a wrong manner. So even when we are during our inspection of the unit, these red alerts we found. What are those red alerts? Default in payment to the banks. Normally, as per terms and condition, even if you see the terms and conditions of the loan agreement, then you will get a good idea, fair idea about the loans sanctioned by the bank. The synopsis information is the terms and conditions are sanction letter. In the sanction letter, the name, when it was sanctioned, what is the rate of interest, what is the limit, when it is to be renewed, what if in case of term loan, what is the installments, and if installments are not paid on a regular basis, what will happen? All these things are mentioned in the terms and conditions. Default in payment to the banks. That's why once a default is there, we will take action. That condition is also there in the terms and condition. Once a default is there, the banks first they will issue the notice. You make good the amount. You have to pay the amount. If amount is not paid, the bank, whatever the usual legal procedures are there, they will take. Normally, the legal procedures is initiation of a Surface Act 2002 or initiation of Surface 2002 or filing of the case with the debt recovery tribunal, or in case the loan is bad and genuine reasons are there, we will restructure the loan. We will restructure the loan or compromise or one-time settlement. This is on account of a default in payment. Once a default is there, what the bank will do? First of all, on default, bank, whatever the securities are there, whether it is a primary or secondary, that is to be valued on the date of default. Even though the notices are not responded, legal notices are also not responded, then first bank will give the notice and bank will conduct the valuation report. They are ready for filing of the suit with either DRT or NCLT, or in certain cases surface also. Or in certain cases structuring also, we will ask the banks. Okay. Next, sundry debtors. Default in sundry debtors and other statutory bodies, etc. Payment to the banks, default payment to the banks, and sundry debtors and other statutory bodies. If the company's debtors are there, 6 months back, the same sundry debtors. Today also the same sundry debtors. Means sundry debtors are not paying the amount. So that's why the bank has to take the action. Not only that one, statutory bodies, like particularly the statutory bodies like the income tax or EPF, Employees Provident Fund, or TDS, even though they recovered, they have not remitted that amount to the government authorities. Not only that one, if at all any listing agreement is there, they are unable to pay. So whatever the statutory bodies are there, all are regret, then it is a red flag for us. So once the company is going in the liquidity problem, default in payment, or statutory debtors are not paying, and statutory bodies, etc., etc. Bouncing of high value checks. This is another red flag. The banker, take for example, the bank issued the limit. The company received checks from the creditors or from the debtors, and they have submitted in clearing. The clearing, the checks are bounced. The checks are bounced. Once the checks are bounced, then the debtors are not up to the mark. So whatever the debtors are there, the debtors are either they are willful defaulters or not willing to pay the amount. So if the checks more than 3 bouncing is there in a month, the account is to be categorized as a special mentioned account 0. If the bouncing of check is more than 3 months, more than 3, then the bank has to mention that bouncing of high value checks, if it are bounced, then the account is to be considered as a special mentioned account 0 and raised by income tax or sale tax or central excise duty officials. This is also another red alert. In the post sanction, we have given some loan, normal, the company availed some loans, either way of working capital or term loan or bills discounting. But sometimes the company is raided by either income tax or GST or central excise duties, etc. Then the bank has to take more precautionary measures. Why? Because once a raiding was happened, they may seize. And if at all the bank is filed with NCLT, all these are override. So why the income tax raid? What is the problem? All these things. Central excise duty officials. And frequent changes in the scope of the project to be undertaken by the borrower. This is another red alert. Once the project frequently he is asking for a higher amount, the project cost is increased, like that. Changes in the scope of the project. Earlier he has given project report. That project report not holds good, sir. This is the revised one. And we require additional funds. This type of the changes are there, then the bank is to be suspected. That is called red alerts. Underinsured or overinsured. Sometimes the company, they will intentionally reduce the insurance cost because insurance is also a cost to them. Okay, they are not, some companies, they don't believe that particularly insurance, the policy is safe for their assets. Some company, it is a burden like that. So once they are taking that burden, once they are understand the insurance as a burden, then they will take under insurance or over insurance theory. The over insurance theory means stocks are not there, but they will take the policy. But insurance company today, some of the companies, they will come, they will verify. But due to this, what they will do is sometimes they don't come. In the meantime, whatever the values are there, they will give and take the insurance. After certain time, some of the companies doing wrong things, they will fire the company, particularly the godown, and the stocks are lost in fire. And stocks means very few stocks, but they may submit the claim for higher stocks. So for that purpose also, over insurance also they are taking. This is what I am discussing here is this type of the red flags in post sanction it is there. In post sanction. And the invoice are divided on TAN and other details. Some of the companies, they don't mention the TAN or, and they are selling the goods. And to avoid the tax, they are doing like that. Dispute on title deed of the collateral security. So once the bank is taken collateral security for the proposed loan, the collateral securities are in dispute. At the time of sanction, they don't tell all these things, but later on, all these things they will tell and collateral securities are also dispute means again it is a problem. So as an IRP or RP, whenever the secured loans are there, what is a secured loan? What type of security is given? Whether any disputes against that security is there or not. If it is any disputes are there, it is as good as unsecured loans. Costing the project, which is a wide variance with the cost escalation. With the cost escalation, costing the project which wide variance with the cost escalation. Some of the companies, initially the project report they will get submitted low, and later on the costing they will give high. These are the red flags. Initially, while giving the project report, always they will give low and get the wrong. After that, what they will ask? No, no, sir. The companies, the earlier, whatever the project report is given, the present rates are not that one, and the rates are also increased. If you give the funding, then I will continue. Otherwise, I am helpless like that. Then the loans are turned into bad. This type of incidents are happening in the banking industry. This type of incidents are happening in the bank industry. That too during the post-sanction follow. So the costing of the project, which is a wide variance with the cost escalation like that. Not only that one, funds coming from other banks to liquidate the outstanding. Today, the banks, particularly the banks, they are giving loans, but whatever their business transactions are there, that is either sales or purchases, the companies are not routing that transaction through the loan account, particularly working capital loan account. And some other companies, they've opened their current account in other banks and routing the transactions there. Thereby, what is happened? What is happened? Then once the particularly the current account opened in other bank, then it is a problem. Later on, how to arrive the sales? How to arrive the purchases? Only the company books are available. Normally, at the time of giving the loan, banks will give the terms and condition. The terms and conditions clearly states this one. So here, particularly the funds coming from the banks to liquidate outstanding loan and coming from other banks. That's why Reserve Bank of India also told to the banks, don't open any current account to any company unless it is warranted. Warranted means any importance is there. So the funds are coming from other banks to liquidate the outstanding of the loan, and that is also there. Foreign bills remaining outstanding for a long time, and a tendency for bills to remain overdue. So once the LCs are open, normally LCs are to be paid within the due date. Within the due date. Sometimes the due date it is not paid. Once it is not paid, then automatically they will extend further. All these things are there. So that's why the foreign bills are also long outstandings are there. So whenever the claims are lodged by the banks, they will mention this one also. This one also. That is the foreign bills long outstanding. Onerous clause in bank guarantees, letters of credit, and standby letter of credit, etc. Some different clauses they will put, thereby it is also a problem to the bank. In merchant trade, import leg is not revealed to the bank. So whatever the raw material is there, they are importing from other countries. That is not revealed. That is also one request received from the borrower to postpone the inspection of the godown. Whenever the banks, particularly the verifying the godowns, then the borrower will tell, no, sir, don't come, and next month come or next week come, like that. Because whatever the godowns are empty. So at that time, if the bank is visited to the godowns and they will prepare the inspection report, in that particular inspection report, they will clearly mention the stocks are. So that is the point. That point, the stocks are not there. So if at all any puff transactions are there, means that is the starting point is that one. And if from that, if he goes back, when the stocks are sold or transferred to any other company or known persons, related party, and you can find out that point. So when the stocks are there, and when the stocks are not there, during that intervening period, you can find out that some fraudulent transaction was happened. And this type of fraudulent transactions can be reversed with the help of NCLT. Delay observed in the payment of outstanding dues. Financing unit far away from the branch. Normally, claims are not acknowledged as a debt. Today, whatever the balance sheets are submitted by the companies, the authenticity is also reducing. The authenticity is also reducing. So some claims they are acknowledging, some claims they are not acknowledging. And if at all acknowledged, it will be reflected in the balance sheet. If at all not acknowledged, it is not reflected in the balance sheet. Some of the creditors, their submission of the claims, if you want to see in the books, it is not available. Then later on, he will submit all the proofs and requested the IRP or RP or sometimes adjudicating authority also to include this in the claims. So claims are not acknowledged as a debt. Some companies, they purchase, but they don't want to show. So this type of red flags are also happening. Frequent invocation of bank guarantees and devolvement of LCs, and invocation and devolvement of LCs or bank guarantees. That is another area. That is another area. So once the bank guarantees are given, after certain time, the bank guarantees are invoked. Why invoke? Any hidden agenda is there or not? Today, in the western part of the country, some of the borrowers, what they are doing means they will take bank guarantee from the bank, and whatever the security, all these things will given, and the guarantee in the name of the beneficiary. Beneficiary, after certain time, he invoked and present the guarantee to the bank. Bank has to pay the amount without any second thought. Immediately the bank pay. For that amount, again borrower is submitting the compromise proposal or one-time settlement with a lower amount. This type of things are also happening. So these are fraudulent transactions, 100%. Fraudulent transaction. Funding of the investment sanctioned by additional facilities. And sometimes they are taking different additional facilities from different banks. So funding of interest, for payment of interest, suppose the loan is there, the interest to be paid. For that, they will take additional limits, which is not correct. The interest or installment to be paid by the company from the sale profits of the company. From the sale profits of the company. And same collateral charged to the number of lenders. This is another red flag we come across while verifying the company accounts. What is same collateral charge to a number of lenders? The same collateral they will give. Suppose I take for example, some banks, they forgotten to create the charge in ROC as per section 77. The same property they will give to the another bank and take the loan. This type of things to avoid this one, the surface to be registered, ROC is to be compulsory. So if at all any weakness is there from the bank side, these people are trying to encash those weakness. That's why some collaterals are charged to a number of same collateral to be charged with the number of lenders. Number of lenders. Are you getting my point, sir? Are you getting my point or not? Any clarifications are required? Any clarifications are required? Okay. Same collateral, number of lenders. Concealment of certain vital documents like master document, insurance coverage. These are not brought to the bank notice. So concealment of certain vital document. The vital document of the company like master agreements or insurance coverage, they are not revealed. And floating from associated company by investing borrowed company. Floating from associated company by investing borrowed money. Whatever the amount borrowed by them, they will give it to the subsidiary companies or subsidiary companies or associated companies. So the funds are diverting to the other companies within that group. Reduction in the stakes, promoter or director. If you see the comparison of the balance sheet last year or before last year or last 3 years, then definitely the reduction in share capital. Why? This is also one puff transaction. This is also one puff transaction. How it is a puff transaction? Because here the capital is reduced. Why the capital is reduced? He is thinking that the company is going to be liquidated. So why should I? Why should I take that loss? And whatever the capital is there, they will sell it off or reduce that one. And the buyback of shares are also there. Buyback of shares. So the reduction in the stake of a promoter or director and resignation of key managerial person and frequent changes in the management. That is another area. That is another area. Resignation of key managerial person and frequent changes in the management. The frequent changes in the management. That is also another area. That is another area. So here what I told is the floating front associate or companies investing borrowed money or reduction in a stakeholder director, resignation of once the key manager persons are resigning, definitely some symptoms are there. So when it is happened, even if at all you want to know the fraudulent transaction means, once all these things are happened during that period, the company will do lot of a fraudulent transaction. Resignation in key managerial person and frequent changes in the management. Substantial increase in unbilled revenue year after year. Thereby, the total sales turnover is decreased. If you see the stock will disappear, but without account for in the sales or debtors. Sales or debtors. Substantial increase in unbilled revenue year after year. Year after year. And large number of transactions with interconnected companies and large outstanding from such companies. So large number of transactions with the interconnected companies and a large outstanding of such companies. So these things are happening in the companies. As a banker, what is happening in the company, we know pretty well. That's why whenever the IP or IRP is facing any problem with regard to the company, with regard to the information, with regard to the alienation of the assets of the company, first and foremost, you interact with the financial creditor who is having a highest stake in the funding. That is the best policy. Because here, some of the IPs, that information is not available. This is an information not available. Instead of arguing all these things, instead of discussing all these things, discuss with the financial creditor who is the member of the committee of creditor, who is the member of committee of creditor. That is fine. That is sufficient. So large number of transaction interconnected companies and a large outstanding of such companies. Significant movement of inventory. Inventory is reducing. Once it is reducing, it should go to the particular production department. It won't go to the production department. Once the production department ordered the inventory, definitely the final product again come into the inventory with the higher amount. But once the inventory movement is there, where the inventory goes? In that case, if at all the transactional auditor is verified the particular gate, inward and outward goods register, definitely some information is available. Disproportionate higher than the growth of the turnover. Turnover is not increasing, the inventory is increasing. Turnover is not increasing, inventory is increasing. What it means? What it means? Means the company is purchasing the raw material and they are diverted the raw material to their personal use or other companies like which are healthy companies under the same management. They will send that inventory to the other. Here today what I told is transactional audit, if at all they are looking with a lens, number of fraudulent transactions will appear. Number of fraudulent transactions will appear. So significant movement in the inventory, disproportionate higher than the growth in turnover. Significant movement in receivables. Why? Significant increase. So earlier the receivables are low level. The immediately it is increasing means related party transactions will be more. Related transactions are or the related transactions are more in that particular receivables because they are giving credit to the known people and anyhow the company is going to be in the going to that CIRP process like that, and the particularly the significant movement of receivables disproportionate higher than the growth of the turnover or increasing aging of the receivables. The aging of the receivables. The aging, normally the 30 days, normally the credit policy of the company. If you see the company, 60 days, 90 days, 180 days, even 24 months, 720 days, like that. So here, the aging of the receivables, increase in the aging of the receivables, means they are intentionally not to pay the amount to the company, not to pay the amount to the company. The disproportionate increase in the current asset and disproportionate increase in the current assets. Once data are increasing, stocks are increasing, no sales are increasing, this is also one red flag. So the disproportionate of increase in the other assets and a significant in working capital borrowings as a percentage of turnover. Normally, any company, last 3 years sales growth if you take, or project next 3 years sales and average it into 20% is the maximum loan to be provided by the bank. The 5% is the borrower's stake. So out of 100 rupees, normally the share, the working capital, the banks will provide only 20 rupees as this one. So that's why you have to verify. The working capital percentage of turnover. Normally, it is not to be exceed 20% of the total sales, average sales of the company for the last 3 years or projections 3 years. That is the working capital. Critical issues highlighted in the stock audit report. But being a IRP or RP, you are having one more chance, particularly the getting the information from the financial creditor with regard to stock audit. The stock audit, particularly the stock, whatever the stocks are there, the stock ought to be audited by the external person, that too, the professional people, and they have to verify and they will give the report. If you go through that report, definitely how the company is diverting the funds to other areas, all these things are known. The stock audit periodicity is the every 1 year. Every 1 year they will appoint, they will come and they will do, and they will issue the stock audit report. So being the IRP or RP, whenever you are handing the company, particularly the company, CIRP process, you get the stock audit report of the particular company. To get a fair idea, what are the fraudulent transaction, whether all stocks are properly insured or not, all these things are mentioned. Whether monthly, whatever the particular stock statement submitted by the borrower is as per the store's ledger or not. Not only this one, the due diligence certificate. The due diligence certificate submitted by the borrower, particularly the company, that is available with the banker. So every 6 months, almost all banks, they are conducting due diligence certificate from the, particularly they will appoint some professions. These professions, they will give due diligence certificate. So the due diligence certificate is also to be verified. Then you will get a rough idea about how the company, in the due diligence certificate, nearly 28 areas are there. 28 or 29 areas are there. These areas are to be these areas are to be checked or vetted by the profession. That's why the due diligence certificate or that stock audit is very useful. Increase in the fixed assets. Assets are increasing without corresponding turnover. Assets are increasing. If a turnover is there, then only the plant and machinery. If a demand for the product is there, the sales are there, then only they require the plant and machinery. If at all no turnover, What is the purpose of the plant and machinery? That is the fixed assets. Because here they will purchase the fixed assets, and these fixed assets later on they will sell it to their known persons with low cost. So this type of fraudulent transactions that are happening in the company. Increase in fixed assets without corresponding increase in turnover. Turnover is not increasing, but fixed assets are increasing. Increase in borrowings despite huge cash and cash equivalent to the borrower's bank, and they are borrowing more. Business is not commensurate. No, the borrowings are not commensurate with the business. Business is increasing, but business is not increasing. Borrowings also increasing. So why? Because whatever the transactions are there, most of the transactions are cash or cash equivalent. Cash or cash equivalent in the balance sheet. So that's why in case of borrowings, despite huge cash and cash equivalent in the borrower's balance sheet, liabilities appearing in ROC such report. So some of the liabilities with they are not brought to the notice of the bankers, and based on this ROC search report, the company without bank knowledge, they are borrowing more amount and not reported borrower in annual report also. Even though it is appearing in the ROC, but the borrower is not mentioned in the annual report of the particular company. Substantial related party transactions. What is a substantial related party transaction? And known people, they borrow from the known people, and selling also known people. That debtors they will write off, and the creditors even it is not a arm's length transaction. They will sell with a higher, they will purchase the goods with a higher price. Substantial related party transactions are happening in the companies, and material discrepancy in the annual report. Material discrepancy in the annual report. That is also one of the area. So that's why what I told is increase in the fixed assets without corresponding increase in the turnover. Increase in borrowings despite a huge cash and cash equivalents in the balance sheet. Liabilities appearing. So that's why these are the red flags. If you go through these red flags, and this type, if at all you are having an idea about this, definitely some quality of the CIRP will increase. So these red flags the banks are following. Again, at the cost of repetition, I will go through once again this red flags as well as insurance policy up to tea break. After tea break, we will cover another areas. These are the important areas, so that's why I'm repeating. First of all assets of the company to be properly insured. Even they have to take workman compensation policies also. Even in any case, any accidents are happening, the insurance companies will pay the amount. So the particularly all primary and collateral securities are to be properly insured. That is ensure to insure. But whenever the bank is getting policies from the insurance companies, 110% of the loan amount or actual value of the asset, whichever is higher. 110% of the loan amount or actual value of the asset, whichever is higher. Normally, if the bank they given loan for for stock. Bank has given 3 crore stock, but the actual stock is 6 crores. 3 crores into 110, 3 crores 30 lakhs. But whereas actual stock is 6 crores, the bank, the particular 6 crores to be insured, not 3 crores 30 lakhs. Why? Because in the insurance companies, they will follow the average clause. Average clause. Next one is a hypothecation clause of the bank to be mentioned in the insurance policy. Whenever the banks are taking insurance policy on primary or collateral security, they will ask the insurance companies to mention hypothecation, the bank name, the branch name. In case any claims are paid by the company, they will directly credit the claim to the loan account. They don't give that amount to the borrower. For that purpose only, the hypothecation clause to be mentioned. And today, to avoid that particular insurance, some of the companies, what they are doing is, they are waiving or they are reducing the insurance premium. They are ready to reduce the insurance premium. The insurance premium reduced means the assets are not fully covered with the insurance. For that, comprehensive insurance they will take. Comprehensive insurance they will take. What is a comprehensive insurance? Comprehensive insurance means cover all the areas, particularly in case of car loan, third party and own damage to be covered. Third party and own damage to be covered. But in case of the other loans, particularly stock, theft, burglary, or whatever the natural calamities are there. Take for example, building. Even buildings are also to be insured properly. In the buildings also, what they will do in the buildings, if the buildings are earthquake was happened, the buildings may be fall down and break down or damage. To once damaged means the total building is to be destroyed. So the insurance claim will come. So that's why the primary and collateral securities are to be properly insured. Take for example, one bank they have given 10 crores for construction of the building, office building. Okay, building constructed. Then immediately the bank will ask the insurance, the company, particular business company, to insure for that building. If they are not doing, bank on their own they will do. They will call the insurance person and cover that insurance policy for that building. They will cover. Sometimes the borrower will inform to the bank, you cover. Once they given that authority, bank will do the insurance policy by the insurance premium by debit to the borrower's account and credit to the insurance company. And every insurance policy to be renewed before due date because it is a sensitive. Second one is the period is only the 12 months. 12 months means every 12 months the insurance policy to be renewed. So if at all they forgotten, then it will be a problem. It will be a problem. So to avoid that one, the banks 1 month before they will renew the insurance policy. 1 month before they will renew the insurance policy. And the effective date is on maturity of the existing policy. The effective date is on existing of the existing policy. Coverage and value of assets to be mentioned in the insurance policy. Insurance policies, the coverage and the asset values are to be mentioned in the insurance policy. Once insurance policy is there, in the insurance policy, what type of assets they are covering, what is the value, where the location, and all particulars are mentioned in the annexure. to the insurance policy. So thereby you will get, as an IRP or RP, you will get an idea how many assets are there, whether all assets are properly insured or not. That also you can arrive a conclusion. For that purpose, you have to ask the bank how many insurance policies are renewed by the bank. One condition in the loan is, as long as the loan is with the bank has to insure properly. Insurance waiver to be approved by the higher authorities in the bank. Insurance waiver. Once some companies, I don't want insurance because it is costly to me. Then what the banks will do? They will get the permission from the higher authority. If higher authority declines, then higher authority declines, then what the bank will do? The higher authority declines, immediately that will inform to the bank also. Next, if the borrower is taking insurance, a suitable letter to be obtained from the borrower. So the borrower, sometimes the borrower is interested. I will take the insurance. Bank should not take. Then a suitable letter to be obtained by the bank. Why? Because if at all borrower given the land, not given the land, not given the letter, later on he may blame the bank also. To avoid that one, this type of this one is required. And follow-up of advances. Advances are to be followed. As I told earlier, the 3 steps in the credit management is the pre-sanction, sanction, and post-sanction. Pre-sanction, sanction, and post-sanction. In the pre-sanction, I have mentioned some steps, sanctions, some steps, post-sanction, some steps. Next, on continuous basis, the banks has to follow up the advances. During the follow-up the advances, banks are identifying some red flags. What are the red flags? That red flags are to be known to the IP or IRP also. Because once you are aware of the one, or once you are educated, the knowledge is there, then it helps in discharging your duty. First red flags is default in payment. Being a IRP or RP, when the loan was defaulted, why it was defaulted, that basic information, at least during CIRP process, in COC meeting, you please ask the financial creditor who submit the application to the NCLT. Sir, why? When it was happened? How long the company is not functioning? When it is sickness was started or a default was started, then you will get a good information for conducting of CIRP. Simply, CIRP means, okay, if at all you want, you can read the application form submitted by the financial creditor that is available. So, default in payment to the banks, when sometimes sundry data also they are defaulted, and the company is defaulted to the statutory bodies also. This is a big risk. Sundry data and other statutory bodies, etc. Next, bouncing of high value checks. Some of the companies, they are given checks for collection. The banks are doing that service. But most of the checks are returned back, means while giving the debtors, or their debtors are not up to the mark. The debtors not up to the mark. Quality debtors they may not give, or sometimes the debtors may be related party also. That's why they are bouncing the checks. That's why they are bouncing the check. Next one is riding by income tax authorities or sale tax authorities or central excise officials. So this is also banks knows about all these things because the account is with the bank for so many years. They know about the vital information about the company. They know vital information about the company. So write the income tax or sale tax or central duties, etc. Frequent changes in the scope of the project to be undertaken by the borrower. Changes in the scope of the project to be undertaken by the borrower. And once they have given project report, after a certain time, they will come, sir, this project report is further increase on account of this one, this one, this one, which is not correct. Once the project report is given, why? Because some of the funds may be diverted. Some of the funds may be diverted. That's why the funds crunch or liquidity problem arise. Liquidity problem arise. That's why they are asking about the additional funds. Underinsured or overinsured. What is a underinsurance and overinsurance? Underinsurance means to reduce the cost of insurance. Some of the companies they are doing under insurance. And over insurance means the company, some companies, not all companies. What they will do, simply they will do that over insurance, the under insurance, the over insurance. Stocks are not there. And they will manage the insurance companies and take the insurance policy. After 1 month, suddenly whatever the wastage is there, they will fire it and they will inform to the insurance company that all stocks are burned. They will manage the loss assessors or investigators and invoice divide on other details. Some of the company invoices without any TAN number, etc., etc. And dispute in title deeds of the collateral security. So that's why even though banks are more cautious about the title deeds submitted by the company, still some of the companies that lot of title deed problems are there, collateral problems are there, dispute on title deeds of the collaterals, and the costing of the project which is a wide variance with the cost escalation. And costing of the project which is wide variance with the cost escalation. And first they will give low, after that they will give high, and they swallowed the funds. Funds are coming from other banks. What is the need? Once the bank, their bankers are X and they are providing A to Z needs. What is the need for the company to open a bank account in other companies? Other companies. And the foreign bills remain outstanding for a long time and tendency for bills to remain overdue. Onerous clause in bank guarantee or letter of credit or standby letter of credit. In merchant trade, import leg is not revealed to the bank. In merchant trade, whatever the imports are there, they have to brought to the notice of the bank. Why they are not brought to the notice of the bank? And a request received from the borrower to postpone the inspection of the godown. Some of the borrowers, what they are doing is they ask the request next you come after 1 month or 2 months like that. Because every month on last day of the month or one last week of the month, the bankers, particularly high value advances, they will visit to that particular company, and what is happening, whether the activity is going on or not, all these things are to be verified. Once the whenever the banks are going to visit to the company, definitely they will tell, don't come, tomorrow come. Like that, they will tell some stories. Some stories. Delay observed in payment of the outstanding dues. Whatever the dues are there, they don't pay. Some liquidity problem is there. And claims are not acknowledged as a debt high. Claims are not acknowledged. And the debt as high. Actually, whatever the debt mentioned in the report, particularly the financial report, is not correct. Some of the debts are more than that. And frequent invocation of a bank guarantee and a devolvement of the letter of credit. That is also there. The invocation of a bank guarantee and a devolvement of letter of credit. And funding the interest sanctioned additional funds. Funding of interest by sanctioning additional funds. To interest payment to be made with the help of the whatever the particular amount is, the interest to be paid through the revenues, not take a fresh advance and repay the interest. That is also the red flags. And funding of interest sanctioned by the addition of it is same collateral charge to number of lenders. So today what is happening means some of the bankers, they will not entered into CIRP, not entered into ROC, only they will create equitable mortgage. This weakness they will encash and they will do in different, the banks, they will allow different loans. Thereby, once all loans, they will misutilize that one. And after that, what they will do is they will not pay and the loan turn into non-performing asset. Concealment of vital data, documents, master agreement, insurance coverage, etc. That is concealment. They don't tell. And they hide that information. Floating front associate companies investing borrowed money. And a reduction in stakeholders of the promoters. So that's why to overcome this one, particularly the reduction in stakeholders. If you compare the capital from 4 years back, 3 years back, 2 years back, 1 year back, if the capital is decreasing, definitely the sickness started 4 years back. Once they find out that sickness is there, then only that problem arises. So that's why the reduction, the stakeholders of promotion, and a resignation of key managerial person. If at all you ask the HR person to provide the information with when the key manager person started, so that on that particular only most of the puff transactions will happen from that day onwards. Once the company is going to be defunct, they will transfer the funds to the known people, or they will write off that particular loans, and whatever the preferential undervalue and fraudulent extortionate transaction from that day only. That's why resignation of the key manager person and frequent changes in the management starts from that day only. And a substantial increase in unbilled revenue year after year. Actually, the revenue to be mentioned. The revenue not billed. If at all billed, sales will turnover will increase. So unbilled amount they swallow. So for this also, if you see the stocks, stocks are decreasing, but the sales are not increasing, or final finished goods are not increasing, means they use the stocks, manufacture the goods, and sell in the market, and unaccounted amount they will use for their personal purpose. Large number of transactions with the interconnected companies and large outstanding from such companies. So here the group of companies, whatever the funds are there, those funds they will transfer to other companies and enjoy. They suppose one healthy company is there that is not under the CIRP, but this that company is also under the control of this company. That's why the group insolvency resolution process shortly will come. Why? Because once a group insolvency is handling, this type of problems will resolve. This type of problems will resolve. So this is the red flags. Not only that one, significant movement in inventory, disproportionately higher than the growth of the turnover. Once inventory is increasing, sales should be increased. Sales are not increased, inventory is increasing. Thereby they are purchasing inventory and they are manufacturing the goods and they are giving to their known people. And a turnover, disproportionate increase in current assets. No turnover, no business, but current assets are increasing. Current assets are increasing. Significant increase in working capital borrowings as a percentage of turnover. Earlier, normally not exceeding 20% of the total turnover is the working capital. But if at all the working capital is sales, out of sales, if at all 30 or 40 or 50, then it is a problem. So that's why the percentage of turnover, the significant increase here also. Capital issues highlight the stock audits, critical issues. So every 1 year, the banks are doing they instructing the professionals to complete the stock audit. So in the stock audit, a number of irregularities they will mention. That also you go through that one, then you will get some information about the company. Increase in the fixed assets without corresponding increase in the turnover. Fixed assets are increasing, turnover is not increasing. Increase in the borrowings despite huge cash and cash equivalents in the borrowing balance sheet. So borrowings are increasing, but that borrowings he is withdrawn from by way of cash and thereby diverting is possible. And liabilities appearing in ROC search report not reported by the borrower in the annual report. That is also another thing. Substantial related party transaction that is also going to be happen in the company. Material discrepancies in the annual report. Not only that one, significant inconsistencies with the annual report. Inconsistency. Annual report is something and increase between the various sections. Poor disclosures in material adverse information. No qualification by the statutory auditors. No qualification by the statute order. Frequent change in the accounting period and the accounting policies. Accounting period and the accounting policies, frequent changes are there. Frequent request for general purpose loans. Banks, they are taking loans general purpose. Normally, the company requires working capital or term loan or bills discounting or the bank guarantee or the letter of credit. But the companies are taking a general purpose. These general purpose they will take and they will use for their personal purpose. Movement on account of one bank to another bank. So some of the companies, they will move from one bank to another to enhance, to increase their fund, their loan funds. That is also suspected. That is also to be suspected. This is in brief about the red flags. So what I will do is we will take 10 minutes break and 3:45 we will discuss another thing. Is it okay?
Okay, sir.
Hmm. Now coming to the factoring. Because lending types are different types. To get the sources of funds by the companies, they are using different methods. First, the own share capital, or debentures, or bonds, or particularly fixed deposits are also mobilized by the companies. And if at all that amount is not sufficient, anyhow, they are going to get credit from the creditors. That's why operational creditors are also increasing trend. And the next one is they are approaching the financial institutions, different financial institutions. That is banks. Banks are giving working capital, term loan, bill discounting, and then they will approach the foreign direct investment if at all they require foreign funds. And beyond that, sometimes the companies may approach the factoring also. Factoring also, whatever the data are there, the data are to be given, submitted to the factoring and ask them for a discount. Once the factoring they verifies the data, once it is a qualitative one, then they will discount and 90% amount they will give. Remaining 10% after deduction of their service charges, once the buyer who buys the goods on credit from the company, then only the remaining amount will be paid. That is called factoring services. Factoring services. For that, in India, number of factoring services are there. Can factors or SBI global factors or some private companies factors are also there. So today, even the insolvency professionals, if they approach the factoring services, they will get vital information about the how many operational creditors are not paid. Operational creditors, not the debtors, particularly debtors not paid. And some factoring, they will purchase the debtors also. They will purchase the debtors also. So here also, in claims, particularly claims submitted by different people, sometimes factoring also. Why? Because on due date, if the buyer not paid the supply, the company has to pay the amount. If the company is not to pay the amount, then factoring will also made a claim to the IRP for getting the amount. So that's why the factoring is also one of the important area. That is also one financial institution. And factoring is a financial transaction where a business sells its accounts receivables. So company, the account receivables, normally the banks are giving working capital for stock as well as receivables. Sometimes the banks are giving only the stocks, not the data. The companies may approach the factoring for a discounting of the bill. Once the company on due date, if the buyer is not paid, the company will ask the seller, that is the corporate debtor. If the corporate debtor is not paid, the amount is to be paid by the amount the claim will be submitted by the particular factor. They submitted to the IRP or RP. So that's why you should have some knowledge about factoring also. Knowledge about the factoring also. The factoring is a financial transaction, whereas a business sells the account receivables or unpaid invoices to a third party called factor for immediate funds. Once the company is having debtors, they will submit. While discounting that bills, particularly the factoring is giving the amount, they will verify what type of debtors and what is the credit worthiness of the data, then accordingly they will discount that data, the bills. The factor collects the payments from the buyer and earns commission. On account of this process, the factoring is also getting some commission. Here are the details. Factoring is act is also there in 2011. Kalyana Sundaram recommendations, that is long back. So that's why still the factoring companies are working. And the act allows banks statutory requirement, NBFC factors, and companies engage in the factoring businesses. Some of the banks, they floated their subsidiaries also. Take for example, State Bank of India, they floated factoring services, that is SBI Global Factor. And at the same time, Canara Bank also, PNB factors. So all these people, they are floating their subsidiaries, and here the factoring is exclusively receivables discounting. Here, this is with recourse. What is meant by with recourse? Once the buyer not paid, the discounted bills return back to the supplier and get the funds by the factor. Regulations. Financial institution must register with the Reserve Bank of India. The factoring service factors, they are also NBFCs. They are also under the scanner of the Reserve Bank of India. Prudential regulation, they must also register every factoring and a central registry. Factoring companies, SBA Global Factors is a factoring company provided domestic and export factoring also. So whatever the export bills are there, that also they will discounting the factors. But the export bill, normally they don't do the discounting. They will outright purchase. That is called forfeiting. Forfeiting. Domestic bills is they will discount, but export bills outright they will purchase. They will purchase outright. So the factoring is a global company that provides a domestic and a factory export factoring services. Very good. And factoring volume, if you see the 2023, the total factoring volume India reached 484 million Indian rupees. 484 million Indian rupees. The benefits of factoring helps the businesses to generate instant liquidity to cover the cash shortfalls. Cash shortfalls. So SBI global factors are there, and they are doing not only the domestic but also exports. But for domestic as well as exports, the difference is there. What is the difference? For export factoring, the factor will purchase the bills. Once they purchased, in case the buyer not paid, the loss will be borne by the factor. That is called without recourse. That is called without recourse. Normal domestic bills they will purchase. They will purchase. But once the purchase, they will purchase. And once the buyer not paid, that amount to be paid by the corporate debtor, that is a supplier. This is with recourse. This is with recourse. So there is a difference between with recourse and without recourse. There is a difference between factoring and forfeiting also. I will discuss that one also. Forfeiting is a method of trade finance and allows exporter to obtain cash by selling their medium long-term funds, foreign accounts receivable at a discount to a forfeiter, specialized finance firm, or a department in a bank. It is forfeiting is a method of trade finance, and here the forfeiting is nothing but purchasing. The purchasing. purchasing. Normally, forfeiting will happen in case of export bills. Again, I am giving the difference between factoring and forfeiting. Factoring, they will purchase domestic as well as exports also. Forfeiting means it is related to export bills only. The factor, particularly the factoring, with recourse, without recourse. Normally, with recourse is for domestic, without recourse is for foreign. Forfeiting is without recourse, that to foreign bills. What is the difference between with recourse and without recourse? I am the company. I have supplied to ABC company. They have given bill of exchange and I have sent the invoice. Invoice copy is there. I have sent the goods by train, the railway receipt, and the company also acknowledge the goods. All these things are set. I will go to the factory. Sir, I have supplied the goods to ABC company and they promised to pay the amount within 30 days like that. Within 30 days like that. So once the amount is paid, there is no problem. If on 30th day, if not paid, that amount to be paid by me. Because I have taken already 90%, but on due date, the buyer is not paid. The factor will recover the 90 rupees, 90% from me. That's why that is called factoring. This is called with recourse. With recourse means on due date, if at all it is not paid, the amount will be paid by the particular the corporate data rule. Okay. Second one is a forfeiting. What is a forfeiting? Forfeiting means when I supplied a goods to the other country and I am sending the bills through the bank for collection. In the meantime, I can approach the forfeiting companies also. In India, some factoring companies, they are doing forfeiting business. And Exim Bank, Export Import Bank of India, also they are doing the forfeiting business. Okay. Once I approached that one, they purchased my bills. That is a 100 rupees bill. I will purchase for 80 rupees, 85 rupees like that. So once they purchased, I need not bother. Why? Because on due date, if the importer pays the amount to the forfeiter, then well and good. If not paid, I need not pay. I need not pay. So that is called forfeiting. Forfeiting is a type of trade finance that allows the business to convert a credit sales into cash by selling their receivables in a financial intermediary called forfeiter. This can help the business, especially exporters, to mitigate the risk associated with the international trade. International trade. But here are some of the forfeiting in India. How it works? The exporter sells the receivables to a forfeiter, who then pays the exporter remaining amount with the after deducting the interest. The exporter submit the document to India factoring or India factoring bankers, who then transit the trade documents to the importer's bank. The importer bank accepts the document and assigns the proceeds to the India factoring. The India factoring then pays the exporter the discounted amount. This is a process. Benefits is once a forfeiting is there, it improves the cash flow. I need not bother eliminating the risk of political transfer and commercial. I need not bother providing finance 100% of the export value. So that's why some of the export-oriented industries, they are doing the forfeiting, and forfeiting means outright sale. So I have supplied 100 rupees worth of goods to Japan, some importer, and I will submit the bills to the Exim Bank or SBI Global. Then they will discount. Boss, for this 100, the Japan, I will give 90 rupees. Are you ready to give? Yes. Once I got given that documents, 90 rupees will give. On due date, whether Japan people pay or not pay, that is immaterial for the corporate data. So the loss will be borne by this is called without recourse. Without recourse. Without recourse. So whatever the with recourse is there, if it is returned, domestic bills, if returned, then automatically it added to the debtors. It is added to the debtors. These debtors are to be recovered by the insolvency professions. These debtors are to be recovered by the insolvency profession. But those debtors who are sold, which are sold by the company to the other country and to the factoring, forfeiting company, you need not bother. You need not bother. Which benefit? Forfeiting. Forfeiting. What are the benefits to the forfeiting company? Benefit. Forfeiting can be especially beneficial to small and medium enterprises. Who acts as the intermediary? The Exim Bank acts as an intermediary between the exporter and the forfeiting agencies. So here, that's why the forfeiting is a beneficial. Most of the 1 minute, sir. So who can benefit? Forfeiting can be especially beneficial to the small and medium enterprises. It is more beneficial. Why? Because they can sell it off and they don't bother about that one. Who acts as an intermediary? Export-Import Bank of India. Sir, today the IP cases are not only from the banks, even factoring companies are also there. Factoring companies and forfeiting companies also. Not only forfeiting companies, even Export-Import Bank of India also, Exim Bank, they are also lenders. They are also financial creditors. And you will get a good amount of the accounts also, particularly in the Export-Import Bank of India. So Export-Import Bank of India also, if you contact those people, definitely you will get some defaults are there. But that particular Export-Import Bank of India advances are high value advances. High value advances. So who can benefit? Forfeiting can easily beneficial for small and medium enterprises who act as an intermediary. The Exim Bank, intermediary between the exporter and forfeit. Disadvantages. The discount rate for fees may affect all overall profit. So whenever they are purchasing the bills, they will ask lower rate. Okay, 100 rupees bill. I will purchase for 80, means 20 rupees. Normally the profit will be 20 or 25. If at all they have taken only 5 rupees is a profit. If 20 is a profit, they don't get any profit. And not all trade receivables are eligible for forfeiting. Only export bills are eligible for forfeiting. There is a reliance on the forfeiter willingness to accept the bill and promissory note. So once the forfeiter, based on the willingness to accept the bills, all these things are there. So that's why forfeiting is not applicable to all accounts and certain accounts only. Now, threats also. Threat is also a financial institution. If at all you are empaneled with the threats, you will get some amount. Threats are also there. Threats, TREDS. After completion of this one, how to mobilize the business from threats, I will discuss in detail. Only 110% of the factoring market in India is under the formal bill discounting scheme. In this scenario, lack of infrastructure, adequate finance is not there, especially working capital finance has become the big challenge for MSMEs, affecting their liquidity and business. So here, the threats is a new initiative. Before the discussing in detail, what is the threats? Today, the MSME entrepreneurs, they are facing lot of problem. They are supplying the goods to the big corporates, and big corporates are not paying the amount in time. Thereby the liquidity problem is arise. Thereby the liquidity problem arise. So that's why the MSME entrepreneurs, they will supply the goods, and the credit period is 30 days or 60 or 90 days. They will allow. The bill of exchange is also signed by him. And once signed, they will take the bill of exchange, invoice, whatever the goods are supplied by him, transport document, all papers they will take and upload these documents in a TREDS platform. In India, 3 exchanges are there. 3 exchanges. They will purchase the threads, and if he supplied today, tomorrow he will get the funds. So thereby, the blockage of income is not arise. The blockage of income not arise. So only 10% of the market. Now I am giving details about the details. What are the exchanges? How they will purchase? In case the companies are not paid, the trades also is having a right to recover the amount from the companies. Crores of number of companies are there in trades. Once the trades, if you target these companies and empaneled as an IP, they will provide, they will give substantial business. Only about 10% of the factoring market in India covered under the formal bill discounting scheme. In current scenario, lack of adequate finance, especially working capital finance, has become the biggest challenge for the MSME, affecting the liquidity and business. High risk perception. MSMEs to get adequate collateral, major reason why formal institutions have limited to exposure to this sector. Today, if at all the MSMEs are approaching the banks for a discounting of the bills, lot of problems are there. Lot of problems are there. That's why they are approaching the TREDS. TREDS is a good innovative system, and this was introduced by particularly the then earlier RBI governor Raghuram Rajan. Mr. Raghuram Rajan. So here, the stamp duty. Normal banking trend, normal banking business, if at all they want some funding, stamp duty and all these things are there. But this is not there in the trades. To address these problems for MSME, Reserve Bank of India introduced e-discounting system. E-discounting system on the lines of successful executed by Mexican Nafin Cardenas model. Mexican Nafin Cardenas model. What is the trades? Trades operating online receivables, discounting platform for facilitating short-term financial transaction in smooth and efficient manner and among the following market participants. To get the finance under trades, 3 people are to be registered. One is banks, second one is the MSME undertakings, the business entities. Third one is the corporates, buyers. These 3 people are to be registered. Banks, MSME, and the buyers. First, the seller sends the goods to the buyer. If you take normally, the seller sends the goods to whom? Buyer. Seller raises invoice on platform. Immediately he will raise the invoice in the platform. Trades platform. Trades platforms are there, I will discuss. 3 platforms. Then the buyer receives the goods and does the quality and quantity check. He will verify the goods buyer, whether the goods are as per my requirement or not. Then buyer log in platform and able to view the invoice, and buyer verify the invoice and accept the payment and provides due date. So whenever you are sending goods to your buyer, then immediately you are uploading the invoice in the trades platform, and the buyer receives the goods. He verify the quality, quantity, etc. Then he go to the trades website, and whatever the particular trades, the invoice is there, he will accept. And once the invoice is accepted, then the invoice move to the financial bankers. And the financials are able to view all invoices accepted by the buyers on the platform. They are able to see, bankers, for all financials able to view all the invoices on the platform. And immediately I will purchase this bill, this bill, like the bankers will quote. Financial quote the rate of interest. Bidding win clauses. Once all bankers are participated or all invoices are participated, then bidding invoice clauses for the financial. Then the quotes are visible to the seller. Seller accepts the quote with a lower rate of interest, and the financer winning the bid and intimated. So among all the bankers who quote the lower rate of interest, the seller will mark that one, and financer winning the bid is intimated. Immediately that message goes to the financer. Boss, you have won this invoice. Funds are transferred from financer account to seller. Automatic. Financer account will be debited and credited to the seller's account. On due date, Funds are to be debited to buyer's account and credited to the financial account. On due date, the amount will be debited to the buyer's account and credited to the financial. If at all on the due date, a buyer's account is not having the funds, the loss will be borne by the financial. Loss. So today what is happening is, in the trades, another opportunity is also there. So the financials, not only the term loans or working capital loans, they are using this one also. Trades. Seller send the goods to the buyer. Seller raises the invoice on the platform. Buyer receives the goods on quality and quantity check. Buyer logs on platform and able to view the invoice. Buyer verifies the invoice and accepts the payment and provides on due date. Invoice moves queues to the financials, and the financials are able to view all the invoice accepted by the various buyers on the platform. Financials are quote the rate of interest everybody. Bidding closes and the quotes are visible to the seller. Seller accepts the quote with a lower rate of interest and the financier winning the bid is intimated. Funds are transferred from financial account to seller account. On due date, funds are debited from buyer's account to credit to the financial account. Earlier, I have shown the picture. Now it is the steps. In India, to register the trades, MSMEs are eligible. All banks and non-banking financial companies are eligible, including government also. Corporates, governments are also eligible. These three people are, one is financial, second one is the business entities like MSMEs, third one is banks, that particular government departments, etc. In India, three receivables are there. Receivables Exchange of India, Mayond Solutions Private Limited, and A-Trades India, the A-Trades Limited. RBI has approval for the following entities to set up and operate a trades receivable discount and the Payment and Settlement Act 2007. So once you sold the goods, you upload your invoice either this company or second company or third company. Why I am discussing this one? Because here, this is also related to the corporate business, particularly with regard to data. If at all data are disappeared in the particular balance sheet and you are unable to recover, if they told I have paid trades means what is a trades, then you will get an doubt. So that's why this is also very important. So the Receivables Exchange of India, Mayond Solutions Private Limited. In India, three exchanges are there. I am the manufacturer. You are the buyer. Again, I am simply telling about this one. Immediately, I have chosen Mayond Solutions Private Limited. I have registered with Mayond Solution. There is no bar. I can register with any person, 1, 2, 3. So, registered with Mayond Solutions. And Mayond Solutions, immediately that they uploaded the information. After upload the information, what is the process? I have sent the goods to you. You are the buyer, I am the seller. And I raise the invoice in Mayond Solutions. You are the buyer. You have received the goods because I have sent by transport vehicle, and you have verified the goods quality and quantity. And once the quality quantity is okay, then you are locked in the platform and able to view the invoice. And buyer verify the invoice. You are verifying the invoice. You accept the payment and you mention the due date for payment also. Immediately that invoice goes to the banker's financials, and financials the invoice they accepted by various buyers. Financials are able to see all the invoices, and they will quote their rate of interest, how much discount rate I am going to do. Once all financials are quoted their rate of interest, the bidding will close, and quotes are visible to me, that is seller, and whoever quotes low, I will accept that one. Immediately the message will go to the bank, you are the winning the bid. Immediately the account will be debited, the financials account, and credited to the seller account. On due date, the financier will recover the amount from the buyer. If a buyer is unable to pay, the loss will be borne by the banker, that is financier. So if at all on due date, you are the buyer, I am the seller. On due date, if at all you have not paid, the loss will be borne by the banker, and I need not pay to the bank. This is the process of the trades. In India, the three companies are there: Receivables Exchange of India, Mayan Solutions Private Limited, Trades India Limited, like that. This is in brief about this one. Now I am telling about why the trades. Because here also, take for example, big companies, they are supplying the goods to the other companies. Take for example, Reliance or more, 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 Super Bazaars. Crores of retail goods they are purchasing from the manufacturers, and they are supplying, whether it is a cosmetic or toothpaste or Samsung or whatever, Sony or mobile phones, crores of rupees they are selling to the Reliance or more, 30 days or 60 days, like that. After that, immediately that bill of exchange or invoice, they will go to the trades and upload, and immediately second day, the companies will get the amount. On due date, the Reliance or more has to pay, or other companies, even pharma companies also, lot of people, the trades they are using. If they are not paid on due date, the loss is to be borne by the financier. And financiers are now they are approaching the NCLT to recover the amount for a trades business also. For that sake only, I have discussed about trades. I have discussed about trades. So again, at the cost of repetition, I will discuss about the trade bills discounting. Particularly, banks are doing trade bills discounting. This earlier I have not covered. Now I will cover trade bills discount. Trade bills discounting trades are different. Trade bills discounting is with recourse. Trades is without recourse. Trade bills discounting is with recourse. Trades is without recourse. Some companies, instead of approaching the trades, they come to the bank and submit these goods are we have supplied to so-and-so company for 30 days or 60 days. Please discount and give me the 90%, remaining 10% after the payment made by the buyer, after deducting your charges, please payment. That is called trade bills finance. In the banking, the trade bills financing is also there. Trade financing bill. So here also, the banks, whenever they are approaching NCLT, whatever the working capital non-payment or whatever the non-payment of term loan or whatever the invocation of a bank guarantee or letter of credit or whatever the bills of finance is there, these four they will ask from the particular, and they will file an application with NCLT. NCLT means working the financial creditor all dues, because banks are offering many type of products, loan products to the corporates. One product, main product is working capital. Second product is that is the term loan. Third product is letter of credit or bank guarantee. Fourth product is the bills finance. What is a bill finance? I sold goods to you and I have given 30 days credit. You have accepted the bill of exchange. That is a trade document, bill of exchange. I have taken the bill of exchange. Whatever the goods are supplied to you, invoice. Whatever the goods they supplied to you by way of the transport, whether it is by air or rail or lorry or whatever transport document. And once the goods are reached to you, then you will give some acknowledgement that all these things I will submit to the bank and ask them, sir, please discount this bill and give me 90% amount. That is called bill discounting scheme. On due date, if at all you are not paid, then bank will recover the amount from the supplier, seller who sold the goods to the buyer. So this is called with recourse. But if at all you don't want to bother all these things, approach the trades. What is a bill? Bill financing against a bill of exchange drawn in the business. Bill of finance is a short-term funding arrangement and self-liquidating in the nature. Bill can classify demand bills or usance bills. Demand bills means on the submission they have to pay. Usance bill after maturity. Demand bills are payable on demand. Usance bills are paid after 30 days or 45 days or 90 days. So this bill trading, the discounting of bills is a big business to the banks also. Demand bills are purchased and the usance bills are discounted. Demand bills normally they will purchase banks, but usance bills they will discount. Why? Because on presentation immediately they will pay. If not paid, the corporate debtor will pay the amount. But usance bills means the banks are the corporate debtor is allowed to the buyer for 30 days or 40 days, 45 days or 90 days like that, or 60 days or 90 days like that. Bill can be clean or documentary evidence. Some bills without any documentary evidence. Some bills documentary evidence is also there. What are the documentary evidence? Bill of lading. Bill of what is meant by bill of lading? Once the goods are transported by sea, the port authorities or ship authorities they will give, that is called bill of lading. Or airway bill. Sometimes the goods are sent by air. Then AWB, airway bill, they will give. And railway receipt. Once the goods are sent by railway receipt, and lorry receipt. Once the goods are sent by lorry receipt. Documentary bills are drawn on DP, delivery against payment. DA bills are against acceptance. Bank sanctioned bill limit as a part of working capital finance source. So, if this amount is also not paid by the borrower, this amount also to be included in the total funds lent by the bank, various facilities. So, loan means not only the term loan, whatever the loan given by the bank to the borrower means either it may be the working capital or a term loan or a letter of credit or bank guarantee invocation or that are not paid on due date at the due date, and the last one is a bills discount. Bills purchase facility extended against a clean demand and checks bill of exchange, etc. Bill purchase facility is extended against a documentary credit also. Bank lend money to the pay check drawer of the bill of exchange, and the same is attended to the dry check or dry bills through the bank. So once I have supplied the goods, whatever the bill of exchange signed by the borrower, the buyer, and along with the invoice and all these things, I will submit to the bank for a discounting facility. The amount paid by the drawer of the check or bill of exchange. This facility helps the unit to utilize the funds before the instruments are honored. Normally, the instruments are to be honored by the buyer after 30 days because the credit is allowed. Credit is allowed after 30 days or 60 days like that. Bill discount facility is extended against usance bills. Seller tenders the usance bill drawn on document title goods. Seller bank discounts the bill and lend the money to the seller. Documents are sent to the buyer bank and request the get document accepted and collect the money on due date. Money on the due date. Once on due date the buyer is not paid, the amount will be paid by the banker, that is not paid by the seller, that is corporate data. Whenever the bank, particularly discounting a bill, bank will take the opinion report of the buyer or credit information of the buyer liability because on due date he has to pay. In the meantime, bank is discounting. The opinion report obtained from IBA bulletin or financial banks and in the buyer's overseas Dun and Bradstreet. So whenever IBA they will they provide some information about the bills discounting, or if you want to know about the foreign buyer, the Indian seller may not aware. For that Dun and Bradstreet also they are giving. And the precautions while purchasing or discounting the bill, the banks are taking these precautions, ensuring bills are, particularly the bills are not accommodation bills. Today, what is happening is accommodation bills are also there. So, without any trade, I'm preparing one bill of exchange. You are accepting. You are preparing one bill of exchange. I am accepting. Both bank, you are going to your bank. I am going to my bank and discounting. Here, the trade transactions are there. That is this type of a fraudulent the accommodation. These are called kite flying bills. Ensure that the bills are drawn place where the bank branch exists. The goods are covered by the documents which are the firm deals. Goods are not concerned directly to the buyer. And ensure the goods are insured and documents are stamped. Whenever the goods are sent by the particular vehicle, it should be properly insured and documents are to be stamped. Document title deeds in the form of a fixed by different agencies, lorry or bill of exchange, etc., bill of lading, etc. The amount of bill drawn is commensurate with the volume of the business turnover. Suppose the company lower turnover is there, whenever there are the bills also you have to take into consideration how many sales are happening through the credit. The goods covered under bills are not perishable goods. We are not discounting the bills perishable good nature. The credit report of the drawee is satisfactory. Bank should clearly lay down the bills discounting policy approved by the board. Bank should negotiate bills under LCs only the borrowers against the sanction limit. The purpose of the credit exposure bills purchase the discount in negotiated to be treated as an exposure of the LC issuing bank, etc. In case of negotiation, sometimes the bank put under reserve. So in case any problems are there, particularly it is happening in demand bills on the site bills on presentation, the bill has to pay it. So sometimes the seller will ask to discount the bill, but some mistakes may be there in the invoice or the bill of exchange or etc. etc. In that case, what they will do is they will discount the bill and this amount they will put it in a reserve. And once the communication received by the bank from other end, that bill they will send to the bill to the suppliers, the buyer's place. Once they realize it, they will release this reserve also. Practice of drawing bills exchange without recourse and issuing letter of credit without recourse should be discouraged. Without recourse is not there. Bills are all are with recourse only. Without recourse clause depriving the negotiation and the right of recourse. Discounting of a export bill and a negotiation. Export bill not covered under LC discount. Not covered under LC discount. Term negotiation arises the shipping and LC arises. And these are the various the important aspects in bills discounting. Again, I am repeating, banks are giving different types of loans. One is working capital. If the company to purchases a raw material, bank will give working capital loan. And the second type of loan is if the company requires any machinery or construction of building, the term loan. The third one is banks are giving bank guarantees also. Normally, the bank guarantees 18 months they will give. But if at all the higher period also they will give, subject to get the higher permission from the higher authorities. The third one is if at all any corporate is going to import the goods from other countries, then bank will issue the letter of credit also. In addition to these credit products, banks are also doing the bills discounting scheme. The bills discounting scheme is whatever the goods are supplied by the corporate debtor, that is company, to the supplier, the buyers, they will discount the bills and 90% they will give. Remaining 10% on payment made by the buyer, the bank will give the amount. Sometimes what is happened is, if the buyer is not paid, the bank will collect the amount from the bank will collect amount from the corporate debtor, that is seller. That is seller. This is the routine way of the bank. And when compared to the particular the working capital or term loan, the volume of bills discounting is more in the Indian bank. So here, being a IIP or RP, whoever is there, whenever they are approaching, they are doing the CIRP process, if any bills discounting outstanding not paid by the corporate debtor means you have to accept. You have to accept that one. But here, the period of limitation also to be taken into consideration. What is meant by period of limitation? The bill of exchange. If the bill of exchange is particularly more than 3 years from the date 3 years crossed, that bill of exchange is a stale bill of exchange, then that should not be accepted. The bill of exchange, normally the trade credit is 30 days or 45 days or 60 days or at the most 90 days, not beyond the 90 days. But in rare cases, even 180 also accepted, particularly the foreign. So here, if that amount is not paid by the buyer, the bank will recover the amount from the seller, that is corporate data. If the seller is not paid, bank will create one loan account. In the loan account, these amounts are debited. So this is also a claim that is to be submitted by the bankers while filing an application with the NCLT. So the bill next, the last one is the TRADS trades. The trades is trades. What is meant by trades? Trades means trade receivables discount rates. In bills of finance, always it is a risky to the corporate debtor. Once the bill is not paid, only 1 minute, sir. Only 1 minute. Okay. So in the bills, the factoring also one type of facility. Factoring is also one type of facility. Instead of approaching the banks, the corporates are approaching the factors. The corporates are approaching the factors. So the factors, they will discount, like banks will discount and they will also discount. If the buyer is not paid, amount that will be recovered from the corporate. That's why what I told is, even if you approach the factoring services also, they will also empanel for IPs, factoring service. Either it may be the global SBI global factors or PNB factors or CAN factors, and the private companies are also more factoring service. Next, forfeiting also. Forfeiting means outright purchase, and forfeiting, it is a problem. Why it is a problem is, only export bills we are purchasing, we are purchasing. So that's why cross-border insolvency is not there. That may not be possible, but this is there. The last one I told about, the trades, TREDS, trades. The trades is the trade, the bills discounting scheme. Some disadvantages are there to the MSME. Disadvantages are there to the MSME. That's why the trades are introduced. Banks are also not doing the bills discounting. Only 10% of the factoring services are available. And even for documentation or all these things, a security bank is asking. That's why 3 exchanges are established in India. That is Mayan Solutions, the A Trades, and these 3 receivables exchange of India, Mayan Solutions, A Trades. Once I have prepared the invoice and sent the goods to the buyer, and immediately I will upload in this any one of the three exchange, only one, because I have to register either receivables or Mayan or trades, or I can register with the 3 also. Once they supplied the goods, immediately I will upload the invoice. Then once I upload the invoice, then I am parallelly sending the goods to the buyer. Buyer seals the invoice in the webs. Then the buyer received the goods, whether the goods are in order or not, quality check, quantity check. Then after that, a buyer logs on platform and able to view the invoice. Once the goods are quantity is correct, buyer will accept my invoice and he will mention the due date. Once the due date is mentioned, then invoice moves to the bankers. And the bankers, I am ready to purchase, I am ready to purchase, and they will quote their rate of interest, whatever the rate of interest. Once the rate of interest is they completed, the bidding window will close. Once the window is closed, then quotes are visible to the seller. Whoever quotes less amount, the this one is he is the winner of the bid. Once the winner of the bid, immediately his account will be debited and credited to the seller account. Funds are transferred. On due date, the financier has to recover the amount from the buyer. This is the process in India. So, on this, the step by step I told. So, what I'm today enlighten you is with regard to the trades, bills discounting, and insurance coverage, and not only insurance coverage, the post sanction, lot of observations are banks are observing from the corporate data. What type of observations that I have mentioned here, and this is only particularly whatever 3 days plus this one day and tomorrow last day to give insights about the bank lending. The bank lending, the cases are originated from either banks or financial institutions. So, okay, you are handling after the case is admitted, and during the process of CIRP or liquidation, you may require some document, you may require some information. Once you are familiar with the credit management, definitely some comfort will be there. Comfort will be there. So for that comfortness sake, the institute is going to they educate the IPs with the banking knowledge also. So with this, today I'm concluding, and last point I want to discuss the emergency loans or CGT MSC. Is emergency loans, corporates are also arrived during pandemic COVID. Government of India told straight away give 20% or 10% on the total loan portfolio of the units. And for that, they have created fund also. In case some companies are failed, that companies, they can claim that amount from the government. So those companies are failed, the banks are claimed that amount up to October. Some of the companies, they received their claims from the government of India, and the government of claims means their outstandings will reduce. Their outstandings will reduce. Once the outstandings of banks loans are reduced, then automatically the balance amount then can be utilized for other people also. And whenever you are giving that particular while providing information memoranda, if at all this claims of the government is there, is under process, mention all these things, so that the resolution applicant who is going to acquire the company, he will also have the idea about this one. So this is in brief about the today's discussion, and tomorrow also we will discuss that last the point, particularly important point of tomorrow also we will discuss. Tomorrow is the last date for this the awareness program on bank credit management. So thank you very much, and good night to all.
Thank you, sir.
Mm.